Have you ever felt like you're flying blind when it comes to your business finances? You've got a great product, your marketing is working, but when it comes to cash flow, bookkeeping, and taxes, things feel messy. If that sounds familiar, you're not alone, and the truth is the lack of financial clarity could be costing you more than you realize. Welcome to another episode of the Vital Wealth Strategies podcast. I'm your host, Patrick Lonergan. Today, I'm excited to sit down with Matt Tait, CEO of Decimal, a company dedicated to making it easier for entrepreneurs to manage their bookkeeping, taxes, and financial operations. Matt's got a unique background. He started and scaled businesses, failed, and learned along the way. Now he helps entrepreneurs clean up their financials so they can focus on growing and keeping more of their money. We also talk about why so many business owners avoid looking at their numbers, how to eliminate friction in invoicing and payments, and the simple steps to finally take control of your financials. And if you're looking for more tools and strategies to clean up your finances and lower your tax bill, head over to vitalstrategies.com/tax. That's where I share advanced tax strategies specifically for entrepreneurs who want to keep more of what they earn. No fluff, just real ways to save. If you're serious about scaling your business, reducing stress, and keeping more of your hard-earned money, you won't want to miss this one. So let's dive in. Here's my conversation with Matt Tait of Decimal. I appreciate you joining us here today. I'm really excited about this conversation. We're going to be talking about one of the most important things a business can have, and that's good, clean financials. And it's surprising how often we see entrepreneurs that have a great product. They're really good at marketing it, but they're missing the third piece of that equation to really make effective decisions in their business, and that's good financials. So thank you for joining us here today.
Well, I really appreciate you having me on, and certainly this is a passion for me, but I also totally understand that every business hates this area of their business, and that's totally fine too.
I think we like good data as entrepreneurs. We like to see good data. Like getting the good data into the systems, though, is generally the hard part. So can you tell us a little bit about the work you do as CEO at decimal.com?
Yeah, so I mean, it's pretty easy. At Decimal, we do bookkeeping, tax, and what I call accounting operations for small businesses. The basic gist of it is you need to pay your bills, get paid, and track it all. And we help people do that and put in the right systems. The right technology, the right tools you use are what makes it either easier or harder. And quite frankly, if the three worst things about running any company are HR, IT, and accounting. Mm-hmm. And your goal should be to not think about any of them ever. Right? And if you set up the right systems and the right processes, then you can put yourself in a really good position. It's kind of the foundation for everything. And we see it when people want to sell a business. We see it when they want to go get a bank note or get investors, or if they just want to start figuring out how to make more money and pull more cash out of the business. You need to understand your financials and how to do that well. And too often we run into companies, and I don't mind because it creates great clients for us, but they'd say like, gosh, we haven't thought of this. We haven't done anything, or I'm still writing paper checks. And all of those things you can make easier and better. And the more you do it, the more cash you make and the easier your business is to run.
Yeah, no, I love that. And I'm just going to walk through what I see as the problems the entrepreneur faces, right? Like we're struggling with accounting and financial clarity. And you just talked about that, right? When we don't have that, it's a problem. It's really hard to make strategic decisions when I'm, we'll say flying the airplane without any data, right? I don't know my altitude. I don't know my speed. I don't know what direction I'm heading. It's challenging. Now I might be able to look out the window and go, okay, there's the Mississippi River. I got a rough idea of the direction I'm headed, but it's hard when we don't have that good data. Then there's also the just feeling of overwhelm. I've got so much stuff going on in my business.
Right.
My financials don't make it into the top 100 things I want to spend my time and energy on. So it just keeps getting pushed down the road. And that's a problem. And then, business shouldn't come at, the expense of, the transparency and the company values and all those things that we're trying to build. If we don't have a profitable business, it's hard to build something meaningful that's going to last. And so I just appreciate the work you're doing. And I'm looking forward to getting into how we can do this without it being, again, one of those things that I have to spend a lot of time and energy thinking about. So before we dig into those problems, a thing that I love about you and your background is You've started things, you failed at things, you've scaled things, all of which I think are critical as an entrepreneur to understand what it takes. There's a quote by, I believe it was Conrad Hilton, who said, "I don't do business with anybody that hasn't been bankrupt twice."
Yeah.
He was like, "You haven't learned anything if you haven't like
Oh yeah.
started something and failed a few times." So I just appreciate your background, and then also, the fact that you're running an accounting business, but you've got a background in law and business and tech, and so the foundation you've laid is really good. Can you just tell us a little bit more of your business story, what how you got started, and things that have worked and haven't worked?
Well, you say it much nicer than I have. I always tell people I've had a very windy, crazy path to get to where I am today. But, ultimately it starts with, I come from a family of entrepreneurs. My dad was a builder here in Indianapolis where I live. And my grandpa had some car shops and trucking companies. And I grew up with that kind of entrepreneurial mindset. In fact, last summer I went to a family reunion and there were 60 of us under one house, which normally I wouldn't recommend that many people under one roof. And we looked around, and at one point, 12 people in that room had run a business or a large company. And so that was the mentality I grew up with. And yet I still made the crazy decision to go to law school and become a lawyer. And look, my wife will tell you that was a great thing for me to do, because ultimately I met her in law school, and she's a real lawyer. So
Yeah.
I practiced for a little bit of time, but then ultimately I wanted to get into business, and Indianapolis is a growing tech and startup scene, and I wanted to swing the pendulum all the way. And that led me to first running a company for somebody else, then starting a business that, as you mentioned, totally failed, to then joining a mid-sized accounting firm as kind of like a entrepreneur in residence and
Hmm.
helping them start new things, and buying what is now Decimal from them, and growing that to, gosh, Decimal's 5 years old now. And at this point, we've got about 1,000 clients and a little over 100 employees. And
Yeah.
so, like, I've been through all of it, and I've seen all of these problems myself. I've seen
Hmm.
what it's like to not care about this area of your business, to have really bad struggles with hiring people, to thinking, oh, I'm going to hire the best accounting firm in the world to do it, and that's worse than hiring somebody. And yeah,
Yeah.
I've gone through that full thing. And so, like any good, crazy entrepreneur, I saw my own problems. I then asked a bunch of people and validated it was other people's problems as well, and
Hmm.
started a business that we've got a great team that's grown pretty fun since then.
Yeah, this is great. So, can you give us an overview of Decimal? Because I think it's more than just bookkeeping. You're really leveraging technology to help simplify that process. So, can you talk a little bit about um, really what Decimal does, how it gets involved in the entrepreneur's life, and makes things
Yeah, I
easier?
mean, ultimately, this pulls back to our mission as a business is just to make it easier to be in business. And we take that kind of operations first approach, where our goal is to look at our clients and say, we want to make it easier for you to operate your company. Most accountants, most bookkeepers look and they're like, hey, I'm going to help you with your books. I'm going to get your financials ready and all of this stuff. Great. That's awesome. We do that. That's really important. But it's more important to the business owner that their day-to-day life is made better and easier. Yeah, because one of the things you kind of hit on in talking about the problem sets that you see is most businesses are bank account businesses. The
Mhm.
owner measures success and failure by what is in their bank account and what they mentally have in their head as going in and coming out. And that's just a reality. We could
Yeah.
tell people they need to change. We could yell at them to change. We could shame them into changing. That's the reality of what they're going to do. And it's okay. We
Hmm.
did a little survey of our client base passively, because we just looked at open rates on emails a couple of years ago, to see how many of our clients actually open their month end reports, their balance sheet, their P&L, their cash. Like, who opens just the basics?
Yeah.
40%.
Hmm.
40% actually open them.
Yeah. That's amazing, because just the way we look at the business, we
Yeah.
look at wealth building. One of the things, the first thing we start with is cash flow and understanding your free cash flow, and
Yeah.
then managing what I'll call liquidity month in and month out. Because the number one reason businesses go out of business is they run out of cash. So it's
Yeah.
like, okay, if we're going to help somebody build wealth, first thing we got to do is make sure we're protecting this thing and understanding
Right.
where we're at from a cash flow perspective. And so it's really hard to know where you're at if you just refuse to look at the information. So that's on one hand, it's surprising. On the other hand, it's not, because it's not something that's screaming really loud. Oftentimes we have these other things that are screaming loud. And even if it is screaming loud, it might even be easier to just stick our head in the sand and pretend
Right.
like it's not a problem. So,
Well, and
yeah.
look, the reality of all of this is when you start a business, you really have kind of two mental goals in mind. One you're willing to say out loud, and one you're just thinking. One, I want to make money. And usually I want to make as much money as I can to reach the goals that I have. Two, I want to pay Uncle Sam as little as humanly possible. Those two
Yeah.
things kind of go hand in hand. And you want to do it ethically and you want to do it the right way, but like you want to be able to take home what you have earned. And that is a natural feeling that's totally okay.
Yeah.
Most people think that I'm going to do that by working harder. And that's not wrong. You certainly have to
Right.
work hard to do it. But then you're also going to lean on the things that you're good at. And very few people that start companies have a natural skill set of accounting or technology. And to be totally fair, in small businesses, accounting nowadays is as much a technology issue as it is a math problem. And it's all about picking the right tools and doing the right things that then make the math, the accounting side easier or harder. And so setting all of that up and doing it well. And look, there are certain areas of a business that you look at and you say, hey, these are what I do really well. I sell, I work with clients, I do that. There's certain things that you really don't do well. Maybe you aren't a lawyer and you need to put together legal documents. You hire a lawyer.
Right.
Same with accounting, is like actually finding somebody that can take this over for you and be able to do it. Because if you do, it's worth the cost every single time.
Yeah. I totally agree with that. And we're big believers in finding somebody that is a who versus learning how to do it, right?
Yeah,
Like the best
absolutely.
use of my time is not, especially if I'm making healthy income, the best use of my time is not, it's not opening the mail. It's not doing my bookkeeping. It's not doing any of those things. I should be handing that off to somebody else where I can have clear data, where we can review it regularly and have insight into the business. But
Absolutely.
I should be, outsourcing that. And maybe at some point, depending on the complexity of my business, if I've got, if I'm a manufacturing company, I might, and huge inventories, I might need some staff accountants, that type of thing on staff. But for the most part, we feel like, outsourcing these things are much better than trying to bring it in house. Either having one of your, operations people try to do your bookkeeping, never a great idea, or you doing it, never a great idea. So we think those are all problematic. You mentioned the tax piece. We love driving down the tax bill. We look at our engagements and we sort of point to that number, and we save our average client $280,000 of income tax. And so when we look at that, it's like the only way we can do that is when we see clearly what's going on in your business, right? And we need to see, what is net income, let's, and what is the owner getting paid? We need to know some of those key pieces. But then as a business grows up, it's so nice to be able to see, cost of goods sold and some of those other factors that, businesses may not have spent the time or energy setting up the systems to like get into that data, because there might be some nice efficiencies in there that we can go help the client recognize to drive more money to the bottom line. So can you talk a little bit about how technology helps somebody go from, we'll say, a financial mess and just the work that Decimal does to go, because I think there's oftentimes maybe some shame associated with like,
Oh,
gosh,
yeah.
I should have this cleaned up. It's embarrassing to get somebody in front of my data. Every year I'm last minute getting it cleaned up, getting it to my accountant. So can you talk a little bit about, the process that you can take somebody through to go from financial mess to financial insight?
Yeah. And look, here's the reality. Everybody is a mess. Even the most cleaned up set of books has issues.
Hmm.
I was talking to a bank the other day and they were like, look, even the best run businesses, every time they get a new CFO or VP of finance, we know they're going to restate something. Like everybody new is going to find something. And so take the shame out. Like I understand it, but the reality is no one's alone in that boat.
Right.
So when you're looking at a mess, there are a couple of things that I think you need to really start with. One, you kind of mentioned it earlier. Good data in equals good data out. And nobody cares about the ledger or the accounting or QuickBooks. What you
Hmm.
care about are all of the other operational things that lead there. So, how am I paying my bills? Am I still writing checks? You should absolutely stop doing that. Find a good piece of software to do that in a very automated way that then integrates with the ledger that takes all the data entry out. Like you want to remove people from the process because people are going to make mistakes. And so
Yeah.
you want to take the data entry and the people side and limit it as much as you can. Also, nobody on your team likes doing that. We were talking to somebody the other day and they were like, I've got 30 employees. They're sending expense reports. It takes me 10 hours a month and they're all pissed about it. I'm angry about it. And I'm like, great, put Ramp on.
Yeah.
Ramp's a credit card. They're going to use it. They're going to take a picture of their receipt. It's going to be done. It's all automated. That 10 hours a month is now
Yeah.
one. Like
Yep.
that's 9 hours of savings. Value your own time as much as you value everything else. And so looking at each kind of point and saying, how can I find the right tool that makes this easy? The other thing is how do I look? So number one, you want to make sure that how you're paying your bills is simple, projectable, and easy because cash flow is important. And one of the ways you measure cash flow is what goes out the door. Two is figuring out a compensation and income creating process that's easy and measurable as well. I see too many businesses get stuck on like a billable hour for a, cost of material type basis that they could really set up recurring payments for. And those
Hmm.
recurring payments are really important because you mentioned like the shame in an area that businesses can really improve on vastly.
Yeah.
One of the craziest things to me is how much outstanding AR exists in
Yeah.
perfectly healthy businesses. And it's
Yeah.
usually because people get busy and they also don't have the processes and data in place to say like weekly, we send our clients a updated AR statement, which is like, hey guys, you've got $1 million outstanding in AR. Here's what's been outstanding the longest. And by the way, you want to make $1 million, stop selling, do this. Like you
Yeah.
actually have the
Yeah.
bird in the hand and you're letting
Yeah.
it go, chasing one in the two in the bush.
Yeah.
Yeah. And so like part of it's technology and putting the right tools in. The other part is putting the right processes and habits around those that are just simply like good stuff. And what's interesting is people will do it in their personal lives. Like, hey, your buddy owes you money. You're going to go collect on that. But for
Right.
some reason, like those 3 clients owe you money and you get busy doing other things. You shouldn't do that. It's not fair to you and it's really not fair to them. Their accountants are actually telling them to go pay it so that they can actually have good data themselves.
Right.
So
Yep.
putting those processes as well as the technology in place, that's really important.
100%. And I love what you're talking about on the AR side. Like we've had some clients that are charging monthly. Like it's a monthly retainer to do their work. I'm like, put it on automation. Have
Absolutely.
QuickBooks
Automatic
or the
draw.
credit card hit it every single month on the first. It will eliminate your and guess what?
Yeah.
If the payment doesn't go through, you don't do the work. You don't end up in this situation where
Right.
you've been working
Pay on the
for
front end. Pay for access to the work you know you're going to do. Don't pay for the results. Make the
yep,
overage the result-based end of the month payment. Yeah. And
yep,
here's the thing, we're all used to that structure too. Like that's
mhm,
not a new structure. So simply working with your clients to do it and having those conversations. That's the other thing. Like business owners have to be willing to have tough conversations. You don't
mhm,
have to be mean about it. It's just like, hey guys,
right,
I need this. Like, let's work together.
yep,
Let's align our incentives. Your incentive is you get great work or great products. My incentive
yep,
is get paid. I want to get paid.
yeah.
It's great.
Well, Matt, I think you're talking about one of the reasons they might not be getting paid is just because their bookkeeping is the 100th thing on the list that they're
You're
doing, and they
absolutely right.
just haven't got around to it. Not that they don't want to pay you. They're just like, I haven't got to that thing yet, right?
Oh, yeah.
And so it's like, yep, the squeaky wheel will get the grease eventually, especially if you're like keep hitting the person. They're like, oh, geez, yeah, I like Matt. I want to pay Matt. I need to get the bill, set up and those dollars out. And so, yeah, I'm always looking for like, I don't like the invoice showing up in my mail or my inbox. Like, please give me an option to just have it
Right.
automatically paid. I'll review
Agreed.
my financials and make sure you're not overcharging me, but it's like I don't want to have to screw with it. I want it as simple as possible. And I think if you can take the friction out of those transactions, and friction is the customer has to do something with the invoice, like no matter how simple that is, like I love my plumber. My plumber doesn't have me on a monthly recurring charge because I don't need plumbing all the time. But when he comes and does something at the office building, he sends me an invoice via QuickBooks. I hit the pay now button on my email. My credit card information's all in there and he gets paid like instantly. I pay it instantly. It's like, I love this versus him printing something off 3 months later. I get it because he finally got around to it. I pay it a couple months after that because, it sat on my desk or what have you. So yeah, I think that friction piece is awfully important. And I love how, building processes and habits
Yeah.
into the equation is good stuff. So if this conversation is hitting home and you're realizing there's more you could be doing to clean up your financials and save on taxes, I've got something for you. Head over to vinylstrategies.com/tax. That's where we can collaborate on practical, proven tax strategies designed specifically for entrepreneurs like you, strategies that actually help you keep more of your money. If you've ever felt like you're guessing when it comes to taxes or deductions, this will give you clarity and direction. All right, back to the episode. Can we talk a little bit about, the shifts in mindset to scale a business, right? Like I start to get my financials kind of cleaned up. What do I need to do to, really, what are you seeing as best practices from a financial perspective to go from, okay, I got $1 million revenue, I want to get to 2, 10, 5, 50, where do I need to go to really level up my business from a financial perspective?
So let me say two things. Number one, I think every business owner, period, should always work and think with the end in sight.
Mhm.
If you start a business today, think about, what is my goal? Is my goal to sell this? Is my goal to make $1 million a year off of it? What is my goal? Because once you make that decision, and if you haven't done it yet, sit down over the weekend, do it.
Yeah.
That will start to inform your decision making before you reach kind of problem sets. And we're talking about our natural flex points that every company has. And I've been there a million times, and I've seen it happen a million times with companies.
Mhm.
And, the biggest thing is preparing for that before you get there. So number one, from a finances and kind of business structure mentality, you've got to think about, do I have the foundation set correctly to grow? And a big part of that is building into smaller and smaller boxes. You and I have actually been talking about some pretty big boxes of like revenue and bills and all of that stuff. Usually as a business, when you're getting beyond that first million and you're really thinking about scaling, and I call that the messy middle, where you're
Mhm.
doing everything that worked when you were kind of startup mode and getting to $1 million, all of a sudden stops working pretty quickly, and you have to do processes and like stuff that quite frankly I hate, but we really need as a business. Once you start to think through those things, you need to get to smaller buckets. Like one of the things we did at Decimal is, as we started to scale well beyond that point, and dealing with 100 employees is different than dealing with 5. You
Mhm.
start to look at, okay, what are all these services that we're providing, and run a P&L on those. How profitable is each thing? You talk about wanting your business owners to make as much money as possible. For them to do that, they have to make sure their company is making as much money as possible. To make sure their company is making as much money as possible, they have to understand the difference between revenue and profit. And so many businesses get trapped in that misunderstanding. They
Mhm.
think, I'm going to grow, and growing is good if done correctly. But the profit, what you're making, is the most important thing. And I can't tell you how many times we've gotten into businesses and seen that their highest revenue generating business line or service line or product line is actually losing them money.
Hmm.
And you look at the next two largest and you're like, guys, these are actually what's making you money. You're getting paid off of these two. And they're like, well, we're selling so much of this. And I'm like, great, figure out how to remove 20, 30% of the costs. And all of a sudden you have a very
Yep.
profitable business. If you can't do it, then guys, like, actually think about shutting it down.
Totally. And I think it's so hard to kill our babies, right? Like,
Yeah.
it's such a challenge. And I want to just highlight what you're talking about here. So if I had a choice, I could have $100 million business, and let's just keep the math simple. And let's say I have a 2% profit margin. Okay. Very small. Like that's danger zone, but I'm making $2 million a year. But I can tell all my friends, yeah, we've got $100 million business. I hear somebody talk about their top line. I'm like, one of two things. A, I don't care, or B, you don't even understand what is the important metric, right?
Yeah.
The top line doesn't make any difference. So I got a 2% margin on $100 million. That means I'm making $2 million. Sounds like a lot of money. Or I could have a $5 million business with a 50% margin and be making $2.5 million.
Right.
2.5
100%.
is better than 2. And my simplicity is, it's so much easier to manage $5 million worth of revenue than it is 100 million, right? And everything that comes along with that. And so I think people get awfully hung up on that top line number, like, oh, we're doing a couple $1,000,000 this year. I'm like, you're not making any money, who cares? Your salary is all you'd be better off just going and getting a job somewhere. From my point of view, it's like the bottom line is where all of the focus should be. And we should be doing everything in our power to make sure that I love the idea of P&L on each service. Like, let's carve this out and just make sure that thing is profitable. And if it's not, we should kill it or change it, right? Like, let's
Right.
go find the efficiencies that we can shove in there. And I love this saying, I'm stealing this from a book on hospitality. It's called Unreasonable Hospitality. But the point he makes in there, when business was tough, he goes, the raindrops fill up the ocean, right? Like,
Right.
all of the little things make a difference on the bottom line. So we started like just going through with a pencil,
Oh
crossing off
yeah.
the things that weren't necessary to deliver the product. And I think that's a key piece too. Like, let's just really get micro on what is making these products profitable or not, and find new opportunities in there. So
Well, one thing that I think, I've got a friend and he takes it to the extreme, but I think it's very cool. He's running a 100-year-old fourth generation family business. And one of the things that his dad started doing that I think is really interesting is every 5 years, they bring somebody in and say, what could we sell the business for? And that's a very fascinating look, because if you're running a fast growing SaaS business and you've got 2% profit on 100 million, guess what? You've got a multi-billion-dollar company, and
right. Yep.
great.
That's great. Yeah.
If you're running a small or a manufacturing business with that, you're probably selling it for that 2 million times maybe 4x EBITDA, 5x EBITDA. And so you've got a $100 million business that you're selling for $10 million. That's not going to feel very good.
Mm-hmm.
But if you've got that $5 million business and it's pumping off 2.5 and you're selling it for 4 or 5x EBITDA, all of a sudden you are making a lot more money. And so getting an understanding of, even if you don't want to do it, just fundamentally understanding what I could sell this for, it lets the world tell you what it's worth, because business owners, because it's our baby, because we're so passionate, we care, we've put blood, sweat, tears, sleepless nights, missed kids stuff, all into these companies. We look and we say, we think it's got to be worth $100 million. There's no way it's worth 10. Then you talk to somebody and it's like, gosh, actually it's worth 10.
Mm-hmm.
And these are all really important things for us to think about and consider. I wouldn't recommend doing it every 5 years. I think it's kind of a
Right.
waste unless you're actually thinking about selling. But they use it as a great opportunity to cut costs out and to just fundamentally get better.
Yeah, I love this. I also really appreciate the start with the end in mind, right? That's a Stephen Covey 7 Habits of Highly Effective People concept. Like, hey, let's start with the end in mind. And one of the things that I think really matters is I'm going to make different decisions on this business if I'm developing it for an income and maybe generational, family enterprise, versus I'm going to build this and scale it as fast as I can to have an exit, right? And so I think those two pieces are really important. And I can't overstate the value of good financials if you're going to sell the business.
Absolutely.
The number of clients that we run across that are like, I'm interested in selling, and we take one look at the financials and we're like, this is a disaster. Like, we've got a lot of work to do to get these cleaned up before you ever take this to market, because any buyer that looks at this is instantly going to be concerned about, I can't tell what's going on. I can't see where the opportunity is. I can't see where the owners, like, you've got a zillion ad backs that are like, need to come back into this thing. We need to get all of that cleaned up before we ever try to take it to market. So that's probably the number one issue, for getting a good value, is you got to have clean books. If you don't, because you think about it from a buyer's perspective, I'm now taking a business that either has, I'm going to be applying a lot of debt to it. Now I have to have the debt serviced, and I've got to find upside in this business, right? That I can, take and grow it from here. And if I can't see that in the financials, if I can't have confidence that I'm going to do that, I'm going to do one of two things. You're going to get a lower offer, or we're going to have a totally different structure for this offer, right? Like, we're going to have earnouts and all this other stuff that nobody wants in their opportunity. And so, yes, I think the end in mind, what are we trying to accomplish when we start is so important. And I appreciate that distinction.
Well, and pull the reason for that back a little bit too. When we run a business, the things that, a lot of it's awesome. We love it, particularly people like me who have done it a million times. Like, I love running businesses. I'm a terrible employee. Like, fundamentally understand all of that.
Yeah.
But the thing that we hate the most is uncertainty and fires that pop up, and they're going to come. The self-inflicted ones are the ones that we can prevent to make life easy. If you set all of this stuff up really, really well, you give yourself a level of certainty, and the level of certainty of knowing that I can pay my bills, pay my people, and pay myself. That's a really big weight to lift off your shoulders, particularly because you already have a million of them. And I always recommend to business owners, like, take your self-inflicted wounds off. Remove those. Those are the ones you can control. And when you do, you'll feel better about all of the other ones. And so that's another aspect here of, when you run your business well, set it up to sell, set it up to profit, set it up to pay yourself. Doing all of that stuff fundamentally correctly just also makes day-to-day life easier in a business. Like, everybody romanticizes running your own company. It's not a romantic thing. It really sucks a lot of the time. And that's totally fine. But take the self-inflicted wounds out and you make it that much easier. And why not do that?
Yeah, I totally agree. There's this misconception out there that the entrepreneur has all the time and all the money.
Yeah.
And the reality is, they are the last one. If something needs to get done, they're doing it, right? And that could be anything from cleaning the bathroom to the client meeting that I had to hop on a plane and go, fly across the country. And then I get paid, sure, but only after everybody else has been paid. All the invoices are paid, the lease is paid, the utilities are paid, the software is paid. If there's any money left over, now I get some extra cash. And a lot of times, especially during the startup phase, we see entrepreneurs that are spending tons of time and energy and not getting compensated at all for that. I think it's one of the reasons we see a distinction between, we'll call it high income earners, like doctors and even maybe some CEOs that are used to this. I put in an hour's worth of work and I get compensated at a high level.
Yeah.
Their spending can get way out of whack, right? Like, we've seen some doctors making a couple $1 million a year, spending a couple $1 million a year, or 2.1 actually. And then we see the entrepreneur, though, they know what it's like to put an hour's worth of work in and not get compensated time after time for that. And so they tend to bring their spending down, because then they understand that I need some financial margin to be able to survive through some of these periods. So yes, the entrepreneur, statistically speaking, nobody should do it. Just go get a job. Right? Yeah. The failure rates just, but
stress
I'm very
levels be lower.
Yes. I'm like you. I'm unemployable because I get there and I'd want to like change everything, and then I'd not follow the system, and then be like, you got to leave. And I'd be like,
Oh,
okay, fine, I'll go start a competitor. But there's some of us that are just wired, even with all of the the warning signs, like, hey, this might not be a good idea. It's like, nope, we're gonna go fire this
we're going to
thing
give
up.
it a shot.
Uh,
You'll
yep.
appreciate this. So last summer, I had an intern, and we're a remote only company. And so
Yep.
fundamentally, most of our employees are a little more experienced, and you kind of want batteries included most of the time. But
Yeah.
we did an intern, and I looked at him and I said, hey, I'm sitting in some meetings and like, you think you could do my job, don't you? And he just kind of awkwardly laughed. And I was like, it's okay. Like, you can tell me honestly, because I remember being
Yeah.
your age and thinking that. He goes, well, and I'm like, I'll make you a deal. I'm going to have you sign an NDA. It's lock solid.
Mhm.
Why don't you spend a whole day sitting through Zoom meetings with me? Just one day, I'll pick. And then let's have a discussion afterwards about how well you think you can do my job. And it was a fun exercise because he sat with me and we were in HR meetings, investor meetings, client meetings, partner meetings, all different stuff about the business.
Yeah.
And I looked at him at the end and I was like, so what are you thinking now? And he goes,
Yeah.
I got lost after the second meeting. And I was like, yeah. He goes,
Yeah.
how do you change context all day long? And you're there for every meeting and you're present and, you're able to do this. And I was like, look, you got to build to it. Like, it's
Yeah.
hard. And this is something you kind of learn. And I've been good. I sucked. And now I'm doing
Mhm.
better. And it's an interesting kind of way to look at life.
Yeah, absolutely. Absolutely. All right. This is great. Matt, if it's okay, can you talk us through, like, let's say I call up Decimal and I'm like, hey, I need help. What is onboarding? What does it look like
Yeah.
if my and let's just assume everybody's a mess to some level, like it's varying degrees of mess. But how do you assess the situation and figure out how to get people moving in the right direction?
So nobody calls and changes their bookkeeper if they're happy. So everybody that comes to us is fundamentally a mess. The biggest thing for us is our client journey starts in sales, and creating one continuous experience is really important. So sales works to do deep discovery to learn about the entrepreneur or the CFO that we're working with, learn about the business, learn about how they're doing things today, learn about their desired outcomes. And a lot of people don't necessarily know what their desired outcome is. And so working with them to find it. And then when you start onboarding, number one is making sure that from day one, you can operate. So our team is doing the books immediately from day one. And then we're also working to revamp the operational processes, to put new technology in place. We want to create a seamless experience that starts to eliminate the time needs from the entrepreneur, and starts to immediately provide the right type of information and data. And so we're working on multiple levels just to make sure, number one, first, most important thing, the business continues to operate and they are still paying their bills, getting paid and tracking it all. That's number one.
Yeah.
Number two is improving and making that process easier. And we like to talk a lot about aligning incentives. It incentivizes us to improve your processes because it makes our lives better and easier. It incentivizes you because it makes your life better and easier, and it keeps your costs down. And so my grandpa always used to tell the story, and I very much fundamentally agree with it. The Henry Ford quote about, like, I believe everybody should be able to get the Model T in any color, so long as it's black.
It's black. Yep.
And you need to look at the client, understand the nuances of their business and their industry, but you also need to say, like, you called us, we're an expert. We're going to give you what's best. You're going to do that. That's why you're priced this way. And we start selling that the whole way through. And that's what ultimately, I think, creates really great long-term relationships, really great expertise on our side, and really great experiences.
Yeah, I love that, and I think a couple things. It ties back to one of the things you mentioned, like get your billing set up so it's recurring. You're not tracking down AR. I'm not having to time track and bill the client. It's like, here we go. We've got a set cost and we're going to deliver on that. Now we do the same thing. And the reason we like doing that is it encourages the client to leverage us for every possible question, right?
Yep.
If I'm buying a car, now we can give you an intelligent answer, but I like the fact that our clients are leaning into us going, hey, I'm thinking about doing this. What is the best path forward? Great. Let's talk about it. Versus if I'm billing them hourly, they're trying to get off the phone with me as fast as possible. They're not leveraging us. And it's really hard to give a client good outcomes when we're not fully engaged in everything they're doing. I love the idea around like, we're creating efficiencies. We're driving a ton of value to the client. Our incentives are aligned. I think it's a beautiful model. And I'm saying that as somebody that's, executed on that model well for a fair period of time. So I think that is wonderful. Now, I'm also looking at like, I think there's some complexity that starts getting into the equation, right? Like there's the cleanup piece first. And I'm just going to think about a restaurant, for example.
Yeah.
Okay. I don't have any idea what products are actually making me any money that I'm selling. Right. And figuring out that cost of goods is going to take a minute to like get my food costs and the time and energy and resources it takes to sort of produce that, sandwich. So how do we go from, we got set up, and this could apply to a manufacturing setup, almost anything. But how do we go from like, okay, I got cleaned up, I've got some like basic good data. How do we start to like stack on that and really get clear on additional data moving forward?
It's all about that process and the technology that you use. You need to track things somehow. Number one, start with the big buckets. The big buckets that you get right, the big buckets that you do well, start with that. Then get smaller and smaller, but do it in a way that creates better processes and better technology and better data collection. If you're doing it on pen and paper, find something better. If you're doing it in a spreadsheet, find something better. Like keep leveling that up. Just the habit of creating and doing it is the first thing. So if you're not tracking that stuff, if you're not tracking where you're buying your produce from in the restaurant or what you're paying your labor or, any of those things, number one, start tracking it. Tracking it is the number one thing. Then take the next step in improving it and the next step in automating as much as you can. And you really want to start to look at, hey, how can I automate? Like one of the things with produce, if you create a bill pay system that can maybe use artificial intelligence to line out each individual type of produce, you can start getting the data in a very digestible way. And then you can start to understand, like, maybe I should buy my lettuce from one place and my meat from another place. And, any of those things you can start to understand and cost out. But first you have to create the habits that you can then improve on. What I don't like is when people immediately jump to the potential future and they go buy this really expensive system. We just had a client that talked to me yesterday and she's like, yeah, we got a new CFO and she put us on SAP. And I'm like, you are a $2 million e-commerce business. You do not need SAP. And I'm like, and by the way, you skipped like 9 levels in getting to the most expensive software. And she's like, well, we just spent 180 grand doing it. I was like, great. Number one, we don't work in SAP, so we're happy to help your next provider. Number two, you just wasted a lot of money and that's a problem.
Yeah. And you're a $2 million company. You probably don't need a CFO.
100%. We're unpacking a lot of issues with the entire statement there. And we've had it happen a couple of times. And ultimately we had a client come back to us in December and they were like, you were right. We shouldn't have gone to NetSuite. We let go of our CFO. We want to convert back to QuickBooks. We want you to work with us. And we're like, great. Absolutely no problem.
Yeah. I love that. And I think there's also, this is worth acknowledging too. There's the term fractional CFO gets tossed around a lot, and CFO gets tossed around a lot. And I think there's probably a good order of operations for how we do this. I think before the first dollar of revenue flows into the business, you should probably have a bookkeeper in place. And it's not you as the business owner. Have somebody that is just there getting your book set up correctly from the get-go, just solves like a million issues down the road. So we can start with bookkeeper, and then we can move to maybe more staff accountant, might be the next level, like somebody that like understands the business, right? Yeah. Staff accountant, controller, can pull some of the levers, make things happen in the business, but they're not doing anything strategically. And then like we pay a fractional CFO to consult with us to help our clients. Yeah. So we're paying them to just get insight into their financials on a level that we don't see we don't have the ability to see into those financials the same way they do. And it's like, okay, this is pretty neat to see how they see things. And then they're often making suggestions on, this is what your team needs to look like. This is what your software stack needs to look like to be able to do that. And that might move to fractional CFO. And I don't know, it seems like we've seen businesses from a revenue perspective cross the $30 million threshold and, running at 20, 25, 30% margins, not have a CFO. They've now brought those in and they're, looking at valuations north of 100 million. And they're like, okay, this is working. But I think people are in a hurry to maybe, add some of those pieces when what they should be doing is calling you and you're building the team around the business, because it's when you start early, you don't need somebody to come in and clean it all up. And you might be like, oh, I need a fractional CFO or a CFO to fix this problem. And it's like, no, you don't. You just need a firm that understands what the entrepreneur does, put the base tools in place, and just continue to build on that.
Well,
so,
and
I don't know if there's anything to add to that, but
no, I think I agree with you entirely. The problem is that ultimately most business owners just want to not think about this and they want somebody to do it for them.
Yeah.
The problem is that they usually aren't willing to take the time to shop to find the right one. And industry expertise and actual experience is so important, because what we see in fractional CFOs are so many people that give themselves the title without the experience. And that's a problem. The other problem, and you kind of hit on it a little bit, is my dad would tell you in building a house, you want to build the foundation first and the second story later. When you go with a CFO first and expect them to then build down, you start to make mistakes. CFOs aren't necessarily known for putting in the right technology infrastructure and the right day-to-day processes and all of that stuff. They're much better at looking forward. And so you need to build from the ground up, and you need to get yourself ready for a CFO, not hope that a CFO will get you ready for them. Also, if you're asking a CFO to do all of that work, that's a very expensive way to use a CFO that isn't actually helping improve anything going forward.
Yeah, absolutely. That's fantastic. I appreciate all of those distinctions. And I love to hear the fact that you've been there, done that with businesses, right? And I think one of the things that you touched on, and I think what is happening through this podcast, is it allows people to build trust, right? Like when I just go Google fractional CFO, or I don't even know what to look for when my finances are a mess, right? I think hearing conversations like this, where people are, and I know you guys have a podcast, but you're doing a great job like getting information out there into the world so people can go, all right, what does Matt do at Decimal? What does Decimal do for us as entrepreneurs? Let me go learn about this, build the trust, and then we can, it makes it easy to engage when I understand everything about the work you guys are doing. So thank you for that. I appreciate it.
Yeah.
So, okay, we've talked about a number of different opportunities for cleaning up the books, good ways to do that. What is the best way for people to connect with Decimal? To sort of go, all right, I've got this issue. I need to get this cleaned up. What I've been doing is not working. Where do we go from there?
I mean, number one, the easiest way is just to go to decimal.com. It's very easy to find, and we have an amazing sales team. As you find, when your company grows, they don't let me do anything anymore. I'm not allowed to sell, and I definitely can't count, so I can't do bookkeeping. But we have an awesome team of really great experts, and they'd love to chat. If anybody just wants to follow my content or hear about my life running a business or the experiences that we have with our clients or on the podcast, just follow me on LinkedIn, Matt Tait, and After the First Million podcast. But it should be easy. Look, whether it's me or Decimal, our mission is just to make it easier to be in business. And that leads to a lot of good things.
I love it. I love how you simplified your message, right? We want to simplify what it means to be in business. That's wonderful. And we'll have links to all of the information you just stated in the show notes, decimal.com, your LinkedIn profile, the podcast. Matt, this has been great. I think if one thing to sort of highlight for our entrepreneurs is, if I'm running a successful business, I need clear data. I need
You do.
that information to be able to sort of fly the plane. And if I don't have it, it's problematic. And I'm not going to be making as much money. I'm not going to be having the peace of mind that I need to, um, be able to run this effectively. All of the hassle. You mentioned this. All the hassle that comes with being an entrepreneur. Let's take some of those pain points out of the equation. And that just comes with having the right tech stack, the right people in place to make all those things work. And so not doing that just leads to frustration and potentially going out of business. So we don't think that's right. We think the entrepreneur is the backbone of the U.S. economy. They drive this country forward. They employ all the people, not all the people, but most of the people. And it's really, I think, where the American dream comes from, even though people get into that American dream, they figure out how hard it is, but it's still good. So, Matt, I appreciate all of the work you're doing to just let the entrepreneur go out there and do their thing. We see entrepreneurs that have a great product, they have a great marketing system, but oftentimes don't have the great financing to really sort of bring it all together. And so this is great. Anything else before we wrap up that we should have discussed that we didn't?
No, I think we covered it all, and I really appreciate you having me on. And look, accounting, bookkeeping, taxes, super boring topic, but fundamentally important.
It's not boring? Having a lot of money in the bank that I can go live a great life, right? What is also not boring is not having any cash in the bank and being stressed out. And so you guys help with all of that. So I appreciate this and think this is fantastic. Again, we'll have all the notes or all the links in the show notes to Decimal and all the good content Matt and his team put out.
Awesome. Thanks again.
That's a wrap on today's episode. I hope you found this conversation valuable and then it gave you some actionable insights to take control of your financials and build a more profitable business. If you enjoyed this episode, do me a favor, share it with someone who could use this information. Whether it's a fellow entrepreneur, a business partner, or someone struggling to get a handle on their numbers, this could be exactly what they need to hear. And remember, you're a vital entrepreneur. You're vital because you're the backbone of our economy, creating opportunities, driving growth, and making an impact. You're vital to your family, creating abundance in every aspect of life. And you're vital to me because you're committed to growing your wealth, leading with purpose, and creating something truly great. Thank you for being a part of this incredible community of vital entrepreneurs. I appreciate you, and I look forward to having you back here next time on the Vital Wealth Strategies podcast, where we help entrepreneurs minimize their taxes, master wealth, and optimize their lives. Until next time, keep building, keep growing, and keep making an impact. And hey, if you're ready to go deeper, reducing your tax bill and keeping more of what you earn, make sure to check out vitalstrategies.com/tax before you go. Let's talk about some of the best advanced strategies there are out there. Simple legal ways to save thousands and run a more efficient, profitable business. Thanks again for tuning in. We'll see you next time on the Vital Wealth Strategies podcast.